The Nasdaq 100 gapped up overnight on Sunday, which filled on Monday. Apple was a big driver of the weakness on the Nasdaq 100, with iPhone sales falling 24% in China for the first 6 weeks of 2024, ranking Apple as fourth in the smartphone market in China. That's simply not good enough. Goldman Sachs downgraded the stock for this very reason. From a technical perspective, Apple, which is part of the Magnificent Seven, is below its 200-day moving average, with head and shoulders formation firmly in play. Fed official Bostic also played down the urgency to cut rates, which would have negatively impacted the Nasdaq 100. This guy is changing his mind by the week, as it was only last week he was suggesting the Fed will ease in the summer. The Fed has no credibility, as they got burnt in 2021 when they suggested inflation would be transitory, only for inflation to pick up sharply. It was in November 21 where the Fed conceded inflation was not transitory and began hiking rates aggressively. They've been burnt before, so they won't want to make a decision on inflation coming down until they see enough evidence of it. But they could wait too long, leading to a slowdown in the economy. The inverse hammer candlestick on Monday led to a sell-off on Tuesday, with Apple and Tesla leading the way lower. Tesla has been having a rough start to 2024, the latest issue being a suspected arson attack halting production at its Berlin gigafactory. Tesla is down nearly 30% year to date, compared to Nvidia, which is up 85% year to date. Apple is also down year to date. There seems to be a bit of a divide going on within the Magnificent Seven this year. Apple, Alphabet, and particularly Tesla continue to underperform, while Nvidia, Meta, and Amazon continue to outperform. Back to the daily chart, and we can see price close below this key trend line in black, and I'll highlight where this comes from shortly. But from Tuesday to Thursday, price held the 20-day as support. We did not close below it. The reversal on Thursday was driven by the central bankers. Firstly, the ECB, hinting at rate cuts in June after the central bank trimmed its inflation outlook. The ECB forecast inflation to hit 2.3%, down from its previous forecast of 2.7%. This was followed up by Fed Chair Powell, suggesting the Fed were not far away from cutting rates. The reaction was a rally off the 20-day, but price ran into resistance. This trendline in red, which connects to the highs from the 12th of Feb this year and the 19th of July last year. Today we're seeing a sharp reversal, back off this trendline, and price looking to push below this key trendline in black. Now I mentioned this trend before, and here is where it connects to. Taking a long-term view, it connects to the highs from the dot-com bubble and the highs from November 21, where the Fed began to concede that inflation was not transitory and that rates would need to go up, which hit tech stocks. We are right on this long-term trend, which is why price is now stalling. It's likely we begin to see price come off this level over the coming weeks and months as profit taking and mean reversion begins to take place on names which have gone parabolic. 3 of the Magnificent Seven have already begun to correct. Are the 4 also going to begin doing the same, with insiders selling stock among the names within the Magnificent Seven? Continue to remain focused on these names to get further clues on the Nasdaq 100's next move. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content, and I'll see you at the next one.